Morning. How are we doing? Good morning, Danny. Amy, Virginia, GC, Rabbit Hole TV. Good name. Evil, Rodrigo, Vitali, Peter, Gregos, Mumo, Callum, Chucks, Isbeth, Dallas. How are we doing? Good evening from Australia. Weird. You're in the future. Or are you in the past? Can't remember. No, you're in the future, aren't you? Very weird. Afternoon, morning, evening. You're okay. Right. So let's have a look at what's going on this morning and what's happened overnight. There's no real news today. Bit of a boring one today. Morning, Charlie. So the main news we've already had this morning, which was the pound retail, which came out as quite a big negative, but it is just retail sales and it doesn't tend to have a massive impact on direction. It's just something they use to drive orders through the market. So we've had a move on the pound. We'll have a look at that in a minute. So the real only news you've got today that's likely to interrupt the market is going to be University of Michigan later at 3 o'clock, which again is very hit and miss. So nothing much on the news front today. The one thing that could have an impact today will be at 8:45. We've got Jordan speaking. So the SNB are very tight-lipped. They don't say much about anything. They don't tell us what's going on with anything. They just do stuff. But every now and again, Jordan will let something slip. So it's worthwhile keeping an eye on that at 8:45. So the pound this morning. Whoops, wrong one. Pound this morning, obviously, those retail numbers being negative drove the market up. So we have had a whipsaw, basically, nothing much. So this propulsion gap basically got filled this morning on that wick. We pushed down into this area here. So we know that they're buying this area up at the moment. So we'll see what happens today. But overall, a little bit of a bullish move on the pound, which is good. But yeah, we'll see. But nothing dramatic. So there's no ADRs today to look at the moment. Market's very flat. These ADR numbers, as you can see on the dash, I don't know if you can see on the dash, but these ADR numbers at the moment are absolutely tiny. I was just looking at this morning, thinking how small everything is at the minute, how tight all these ranges are. I used to trade the pound New Zealand at 350 to 450 ADR. It's 114. Yeah, ADR 114. This market is so contracted, so tight at the moment. It's just not doing anything. Nothing is. It's really, really bizarre. Monthlies, we're coming up to the end of the month. It's the 24th. We've got one more week of trading left. There's not a lot really hitting ADR, average monthly ranges either. So the only things that have hit are the yens and the pound Swiss. So New Zealand dollar CAD has as well. But so yeah, very, very weird month this month. Very weird price action as well. Anyway, so no ADRs to look at today. No RSIs really on the hourly either. We've had nothing this week, much at all on RSI either. So the few entries I've had, but nothing much to look at. There's some 4 hours, but we'll go through all the pairs this morning, have a look at everything, just see where everything is. We've got some good resistance and support levels coming up, which price is moving around. So, but yeah, we just have a whiz through everything. So overnight news, not a lot. Japanese CPI numbers came out as forecast year on year. So that's as expected. The overall nationwide, which is the core is the main stuff, the important stuff that is really there, makes up the majority of inflation. That came out as forecast. The overall came out ever so slightly higher, but it is a drop. So we were on 2.7, it's dropped to 2.5. They were looking for a 2.4, so pretty much got what they wanted. So no real impact on the yen there. Not that it's as important because they don't use interest rates. Well, they're starting to use interest rates to drive inflation up and down, but at the moment it's not big enough to actually make any impact. So, so apart from that, overnight, not an awful lot. So there's your retail sales coming in this morning. We had the GDP figures for Germany coming in as forecast. And that's it. So nothing particularly exciting overnight. So 8:45 we've got SMB, and then we've got University of Michigan at 3. That's all we got today. So looking at the overall movement, I banked a little bit today on Euro US. So this one here was an H1M5 entry. That's where it started to get extended, and then obviously we got a little bit more extension there the following day. But 3 positions on that. That one I took off ahead of news last week, and the rest of it I've just got out of this morning. So nice little profit on the Euro US dollar move. That's a pullback on that leg. So I'm out at resistance, looking for potentially a bounce, but overall probably going to drop the euro, isn't it? We've got a double top which we're playing here out of that propulsion gap, so there's a good chance that that will start to drop, but the US dollar's not been strong enough basically to make anything move at the minute. But euro obviously is going to drop their interest rates, so the euro will start to come down week after next. I'm still in the pound US at the moment. I can get out of this at a break even at the moment, but I'm kind of looking for a pullback still on this. And I think the pound, although we're not looking for a June drop, there is still a chance that we might get a July/August drop on the pound. So I'm just looking for one strong US dollar news event, really, to give us an ADR push. Back down again, same play as the euro, back down into support resistance down here. At least to there. If it gets down to there, to be honest, ADR today, I'll take it off because we got a nice double bottom bounce there. I'm not going to leave it on over the weekend just for the sake of it. So if we do get down to that area, I'll get out today. In fact, I might actually just adjust my TPs down to there because I've just got out the euro. So no point in having them both. So yeah, wait and see what happens with that one. Right, morning monkey, how are we doing? So I will basically just run through all the pairs today. We'll have a look at everything. There are some ADRs on 4 hour to look at, like Aussie New Zealand, that is still extended to the downside. So it's broken out that level as well, which was my target. So annoyed. Always the way. As soon as you get out. So yeah, we'll whiz through everything, have a look at everything. If there's any pairs specifically you want to look at in any more detail, let me know. Otherwise, I'm just going to whiz through everything because I'm not here next week at all because it's school holidays. It's bank holiday in the US and the UK on Monday as well. So I'm off next week. I'll still obviously be monitoring stuff. But yeah, we'll just look through everything and see where it's going. But next week, might as well just do a quick overview of the week coming up before I do the analysis because next week, we've got very little news happening. The week after is where it's all hopefully going to kick off. So the week after next, which is when I'm back, we kick off with the PMIs. And then we've got the Canadian rate along with the Swiss CPI figures and the PMIs for the US. We've then got the euro rate. That's when we're going to be dropping that euro rate. So this is where it's all going to kick off. And then on that Friday, obviously, it's non-farm payroll. So it's the unemployment rate for the US. So every single day, the week after next, we've got some high impact news. Tuesday, not so much, but Monday, Wednesday, Thursday, and Friday, huge volatility going to come into the market. So that's when it's all going to kick off. And this is going to be the first major interest rate change, which should hopefully start that cascade effect of everything starting to expand. We'll get the ADRs expanding, the market starting to move, structure coming back, things just kicking off, hopefully. So that's where it's going to be a decent week, hopefully. So next week, you've got Ueda speaking on Monday, bank holiday in the UK and the US, so flat day. Tuesday, flat day. We got Jordan speaking. That's about it. We've got consumer confidence, which doesn't do anything. Australian dollar CPI figures. So that is your only news event next week that's got any chance of really driving anything. So Aussie CPI, that's going to be an important one to see what happens with the inflation figure in Australia. Then we've got unemployment claims, which is not really that important. GDP, which isn't having an impact at the moment on that Thursday. Home sales doesn't do anything. We've got GDP for the CAD, again, not important. PCE, little bit more important on the Friday. So that's it. So of next week, the only things really that are going to have any impact is that and that. So it's a dead week next week. Good week to take off. So just monitoring positions really, and just letting the EA do its thing, get in, get out if there is any movement, and do other stuff. So nothing exciting really to look at for next week. Morning, Dev from Mauritius. Very nice. Morning, Mustafa. Go and take a look at the pound CAD when you think it's headed. Thought it would have been dropped by now. Nope, still going. DD control on that one at the moment. Still going. We've had positive news. Well, we've had news for the pound this morning, which the market seems to have reacted positively to. But yeah, just parabolic at the minute. We've got no resistance coming up on this either. And we've got daily resistance. Pick a level, basically, isn't it? I mean, that's your first and most recent high, which is 250 ADR away. Then we got, so it's that area there. Then we got another little wick there, wick there, wick there, wick there. Then we move up to this level here. There, 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 and there. And back here as well. So that area is historically going back to 2017, where we tend to sell from. So it could be that we're reaching for that, probably are. But whether or not it's got the legs to get there in one go, we'll have to wait and see. Unlikely. I mean, it's 250 ADR. So I'm getting in aggressive on this. If it pushes any further, I'm getting aggressive position sizing on. Try and make some decent money, get some of this back when we get the pullback. But yeah, I mean, it's basically all of last week and all of this week parabolic. So it's 2 weeks up. So if you look at a weekly chart, yeah, massive rally. But, you know, you don't often get, I mean, that's a parabolic move, but that's, what was that? Was that Liz Truss? I think that was Liz Truss, wasn't it? Getting it wrong. But yeah, I mean, 3 weeks there, 2 weeks there, you had 3 weeks there, a couple of weeks, 3 smaller weeks there, 3 smaller weeks there. So it's not often you get a rally of more than a couple of weeks before you get some kind of pullback. I mean, if you look at this one here, look, we had a push. That's a bull candle, but look at that massive pullback. Massive pullback. These are exits. These wicks to the upside here are easy outs. There's more than an ADR movement down there. So it's massively stretched. It will come down at some point. But when, we don't know. So just got to hang on until they exhaust this move. When we run out of people looking to sell, it will just collapse. But when, we don't know. Morning, George. Morning, Jeremy. Guess I have to wait until next week to see, because I'm still in the sell. Yeah, exactly. So that's what it's all about. Trading, waiting, watching. There's nothing you can do. You are basically on a train. The train is moving in that direction. At some point, it will get to a station and turn around. Which station it's going to be, we don't know. If we knew that, we'd get on at the station it's going to turn around at, but nothing that can tell you where that is. So that's what trading is all about, getting in and extracting money out of market movement. But market movement is random and controlled by banks. So, you know, it's not a predictable thing, is it? But hopefully we get something out of Bailey that will start to drop that pound, because the figures yesterday weren't particular. I mean, that CAD figure, look, it's ever so slightly bearish, which is why that's rallying a little bit. But the figures for the pound, the PMIs, were mixed. So it's not bullish, not bearish. I was hoping to get some bearish numbers. So the market basically still has no clue as to what's going to happen with that interest rate yet. We have no confirmation. So there's no reason for the pound to drop dramatically at the moment, but that will be coming. So waiting. All about the news. And we haven't got any news next week. So, you know. Morning, Franco. Been looking for you like you owe me money. Man, I've been looking for you like you owe me money. I haven't gone anywhere. I have been here, Franco. Same place. It's all published on the website when I'm on. Don't hide. Right, so let's start off with the Aussie CAD. So as you can see, Australian dollar at the moment has been fairly strong. Morning, Blue Trader from Pontevedra. Today is sunny. Sunny here as well. It's not going to be here this weekend, but it is today. Aussie dollar is basically bullish at the moment, but not massively. So I've got a long on at the moment on this this pullback. Sorry, yeah, long at the moment on this pullback from yesterday. Or was it the day before? Day before. So first entry on a long there. Very, very small target on this. So we are stuck in multiple ranges on this at the moment. So I'm looking basically for a mean reversion to half of this range. That's all I'm after. Just a quick couple of $100 to see if we can get there and then probably fall back down again. But who knows? So at the moment, this is very, very sideways, very news driven. We just get news stuck. That's what we're doing. So no real advantage, bullish or bearish Aussie CAD. It's all sideways at the moment. So you can pretty much take it in any direction you like, but it's not really moving very much. As I said, all those ADRs contracted dramatically at the moment. So we're waiting for something to kick off, probably the euro interest rates, before everything starts to rally again. So at the minute, sideways. Nothing interesting, but have got a long on it, but very short target. Last short was there. As you can see, I didn't get greedy on that either. Out as fast as possible on stuff at the moment. Just get it in the bank. Aussie, Swiss, same thing. Swiss franc is dead in the water at the moment. It's more weak than strong, but dead because there's nothing happening in the Middle East at the minute. So we're not really doing anything on this one either. Nice double top M pattern forming up there, but it's come straight back down into previous support area. So potentially we'll be forming a range there. So if it does get an extension to the downside, there's a long opportunity there. But I'm not in any Swiss at the minute because I just don't know what's happening with their interest rates. They're likely to drop another change, which is why I'm interested to see if Jordan says anything this morning of interest. When he speaks, 8:45. But yeah, pretty much dead at the moment, that one as well. All the yens I will whiz through. The intervention is almost off the chart now. It's been that long since it happened. Nothing's happening. So yen is, again, completely dead. We've got Ueda speaking on Monday. Hopefully some kind of guidance will be given as to what they're going to do with interest rates, which might help the yen. But at the moment, it's just hemorrhaging completely. It's stuck. It's undone at least one intervention, if not the second intervention. But as you can see, it's dead, totally sideways. We had some strength coming through yesterday, but not a lot. That's it. So yen is just stuck. It's flip a coin and you might get an ADR out of it. Yeah, you can see there, that's ADR high, that's ADR low. You can see what price is doing. It's just not doing anything. So this isn't the sort of thing you can get into and hold at the moment because it's just not doing anything. So it's the shock factor after these intervention moves where the market is just scrabbling to grab its money back that it lost during the interventions or get out of the positions it's in drawdown from the interventions. That's it. So it's now down to the Japanese to either intervene again and kickstart this move or try and kickstart this move, or for them to try and do something with interest rates to try and drive the yen. But until then, it's going to be pushed by the other currencies. So if the euro drops dramatically, euro yen will drop. That's it. It's going to be driven by the base currency, not the cross. So very difficult to do anything with the yens. Again, I'm staying out the yens at the moment because they are just grinding. I mean, you would never have thought that the intervention would just get undone over a period of 2 or 3 weeks. It's not happened before, is it? So, you know, there's just no way of predicting what's going to happen to this thing. At any point in time, the Japanese could press that button and nuke everybody again. Yeah, it's potential for them to do that. Because if this thing drives up to here, that's what they're going to do, because they have to. But can they? You know, this is the question we don't know at the moment. Have they got any powder left to put another move in? So at the moment, US dollar yen, this is the driving force for the yen and why they want the strength in the yen, because it's becoming uneconomical to do anything. It's just looking bullish. So, but you know what will happen if you go well long it back up to all-time highs. They'll do that. It's just not worth taking a risk on. There's plenty of other stuff to trade. So sticking clear of the yens at the minute. Aussie New Zealand, we got that 4-hour RSI extension to the downside. Lovely divergence showing. Actually, it's not anymore. It's dropped yesterday. It's dropped. So we're out of this low, massively extended. So looking for a push back up into this area here, on its way potentially back down again. So absolutely no reason for that. Absolutely no reason for that. And absolutely no reason for that. This is the New Zealand dollar interest rate not changing. This is the market overreacting to it completely. So who knows where it's going to go next? But absolutely no reason why we shouldn't be coming back down here. There's no reason for the New Zealand or the Aussie to be strong in any way, shape or form. There was no reason for that move. So again, equally, there's no reason for that move, but that's probably what's going to happen. If you look at it longer term, we are just sitting in a huge range, and this is a reaction to range highs. That's where we should be headed. There's no bias, which is why we're not going anywhere. Yeah. So, but you are stuck bang in the middle now. And the danger always is of a trend starting. And if a trend is going to start, it has to start from a pullback, then make a new high. So this could be it. But this is where we should see the reaction. So it looks to me like a good long at the moment, because we are nicely extended on that 4-hour RSI. We should be undoing a percentage of this move, but whether or not it does that or that, once it's got here, we'll have to wait and see. So good looking long opportunity. You can drop down lower time frames and look for a reversal alert. If you get an hourly reversal alert, that's probably not a bad one to take. But to get out back up at 225 ADR, or if you want to hold it, if you think it's going to go longer. Aussie US dollar stuck totally at the moment. This is just extended on the 4-hour. We're down back at the 24.72. You can see by how close these moving averages are together. Again, we're just not going anywhere at all at the moment. It's sideways. Everything is sideways. So we have got some movement on it though. So there's been quite a few decent trades in here. So shorts or longs, doesn't really matter. Can get in any direction on this at the moment. It's just coming down for a 4-hour RSI extension, just about. So good looking long opportunity. Hourly, not quite triggered a trade, but there was one there which I got out at a break even on a pullback because we had some news. It would have gone up to target. That was target. I just took a little small profit on it on a break even. But yeah, like it long at the moment because it's extended to the downside. We've got upside targets. But when it gets up into there, it'll be a nice short. Doesn't matter. There's no bias either way. Swiss franc, CAD Swiss, again, very, very sideways. All the Swiss francs dead. So you're going to be pushed around by the Canadian dollar at the moment. We've just had some CAD news. Big, strong push yesterday. So the US dollar PMIs yesterday came out as bullish. So that helped the Canadian dollar a little bit. We obviously had the CAD CPI numbers coming out as a miss. So as you can see, there's so little reaction. Yeah, we've had CPI, we've had PMIs, we've had everything. And what have we done this week? Just nothing. You know, this is ridiculous. It's just so much news and so little action. But got a propulsion move in yesterday. We have broken that low just about, tapped into that previous resistance. So that is now obviously support. Market is reacting from that this morning. So the question is, are the sellers that started this move going to hold this, or are the buyers that bought support going to push it back up into those highs? So we're either going to get that reversal holding, retesting and dropping, or we're going to get that reversal working and pushing back up into those highs. It's not extended enough for me to get into it at all. So sitting sideways, just waiting for it to do something, really. We covered the yens. So all euros, I've got the EAs turned short only on euro at the moment. So I'm not looking for any long opportunities on the euro right now, just because that interest rate is dropping in 2 weeks. So that should hopefully start to weaken the euro, but we'll have to wait and see. Market hasn't really factored a massive drop in the euro, as you can see. We've had a couple of weeks of down. We've had nothing. So this is a really good looking short opportunity where we are right now. It's not extended on RSI, not quite, but it's a weekly resistance twice, which was a previous support. So it is a very good sell level. Question is, are next week we going to continue to drive up a little bit more before we drop it the week after when the interest rates change? Have to wait and see. So there's no entries on it at the moment, but more short than long. That goes for all the euro pairs. So euro CAD, I've already got shorts on. This is still rallying at the moment off of the weak Canadian, but yeah, looking for that to drop as well. Euro Swiss, same thing. So this one's a little bit more tricky. You just had a reverse alert on the hourly on this after a 2-day accumulation. We've pulled back into basically that previous 2-day accumulation, and it's pushing back up. So it's just forming a range at the moment. So nothing particularly exciting on this one, but would rather short it than long it. But you're going to find this is very difficult because when the euro drops, the Swiss will probably drop with it. The Swiss is already bearish because they've dropped their interest rates unexpectedly anyway. So it's a short against a short, which equals sideways. So it's who's going to be the shortest. And that should be the euro, but who knows? Euro pound, got longs on this at the moment. I got out some of the longs yesterday. They're in the propulsion, just in case we sold the propulsion, which we did. We've just tapped up into propulsion again, which they've just sold again. So we know there's a load of sellers here. Obviously, it's obvious. So we've sold this area now 3 times. So if we do get up into this move being filled, I'll be out. So I've made some decent profit on that. Done about 60% drawdown control on the original position. So getting up to this level makes the overall trade a very nice little profit. And it's 125 ADR today. Got no news catalysts though today to drive this. So I was hoping we are going to get really bad retail sales for the pound, and that would give this euro a chance to pop on the pound weakness. But we got negative, quite bad numbers. But as you can see, the market's not reacted to it. So I'll be looking to get out of this. As soon as I'm out of this, I'm short only. So obviously there's a chance that this could retrace a lot further. You can see that's my original target that I was aiming for, these propulsion gaps up here, but there's a good chance they will get orphaned if we do not get there by the time that euro rate drops in 2 weeks. So I get the feeling we're just going to do something like that for the next couple of weeks on this one. Euro New Zealand, it's been obviously dropping, same as the euro odd. These two look very, very similar. They always do. So yeah, shorts at the moment, looking for an opportunity to get in on an RSI extension or an ADR hit to the upside. Somewhere up here would be great. But and then obviously we'll hopefully break down. But at the moment, they're rebuying this propulsion. So not letting the market through that level. So likelihood is we will just flip-flop for a bit down there. Euro US dollar shorts got out of this morning. So that was the exit there. So out of all of that, we pushed up into propulsion basically. So got high, pushed down. So this is the high now basically, where we'll probably do something like that. This is bearish because obviously the interest rate's going to drop. This is neutral, ever so slightly strong because we're not going to be dropping interest rates. So this should be a very good sell because obviously any strength we get in that US, any inflation any inflation that does not come down in the US is going to drive this down. Everything's going to drive this down. Everything fundamentally should drive this down. So looking for opportunities up here to get into shorts and then just keep getting into shorts as we put in some kind of bearish market structure moving forward over the coming weeks and months. Pound, same sort of thing. All the euro and the pound is going to be the next to drop interest rates after the euro. We don't know when. Some people September, some August, some saying it's definitely not June, but it might be July. So somewhere between July and September, in 3 months, we'll get that rate starting to come down. So the fundamentals on the pound are now bearish. Yeah, we're looking for a 2.3 target, a 2 target. We've got a 2.3. We're very, very close. These guys are on 2.4 and they are already dropping rates and their rates are lower than ours. So there is every argument for this to come down. And we have an election in July. So both parties will be pushing the Bank of England to at least announce an interest rate drop, if not do it July, because they will want to use that in their manifestos to say, well done, Rishi, you got inflation from 11% down to 2.3. We will be the party to start dropping your interest rates so that you pay less on your mortgages. Yeah. So there's a lot of pressure for that to drop. And obviously that will be bearish pound. So all the pound pairs, again, we should be looking for more opportunities to short than long. But right now there isn't. So you can kind of trade it in any direction. But I'd be much more interested in holding shorts longer than I would holding long positions. So shorts on this one. Why did I not get in there? I don't think I'm trading the pound odd. I think I didn't want to double up on, because I'm in the pound New Zealand. I didn't want to double up my exposure on the Australasian pairs. So shorts, but that's a nice looking one there. You would have had a nice kind of half ADR out of that. That's all. But if we do manage to get up into ADR at any point today, because the pound rallies, that would be a lovely short opportunity up there for them to undo this. And obviously when you get up to there, you've got nothing but gorgeous, massive propulsion targets to the downside. So looking for short to see if we can get some more extension on it. If you're not already in it, you probably, if you're running the Position Trader EA or the Market Reversal Alerts EA, you will have been in a short probably from here. May have even been in a short from there, depending on what your RSI extensions are. So you might actually already be in a couple of positions on it. But when we get up to there, that should start undoing all of that. Pound CAD, that's the one I am short on. So done a couple of drawdown controls, 3 drawdown controls on this already. Look, so it's just not stopping at the moment. We've had news which has been slightly bullish on the pound. We've had news which has made the CAD slightly weak. So just pushing up at the moment. So we're waiting for this to undo this leg. At some point it's going to come crashing down. We've got a lovely RSI extension. We've got a lovely embedded RSI. We've got a lovely distance from the 24. When we get far away from the 24, we very rarely get that far away before we pull back. So we got a nice pullback coming. It's just we need something to kickstart the market, and there's no news to drive this at the moment. So I was hoping this morning's news, being negative, would start something off, but Market seems to disagree today. It's obviously not interested. Pound Swiss, very much the same, much more interested in shorts than longs on it. It's been trending because we've had a good strong pound, and obviously the Swiss franc has been massively weak because they dropped their interest rates without telling anybody, which is obviously always going to weaken your currency. So, but this will start going into a bearish to bearish stance. So small moves to the downside, really. But yeah, I mean, it's a massive uptrend at the moment. So if you think the uptrend is going to continue, just keep doing that. I don't use trend in mean reversion because it doesn't matter. But beautiful opportunity for shorting this at the moment, and that pound will start to weaken at some point. Pound New Zealand, I have longs on at the moment. So been making some nice money out of the pound New Zealand. Kind of want to get out up here now on this one. So as you can see, it's a bit of a mess, this chart, but entered long there, couple of drawdown controls done, took some profit off as well on it last week, took some more profit off of it yesterday. I'm at break even on it, so I'm looking for a push up into propulsion basically. So if we get up to these highs today, I might take it off today because I haven't got to worry about it next week. But I think there's a good chance we'll come up into that propulsion gap. But overall, there is no bias. Yeah, there's no bias on the pound, no bias on the New Zealand. Therefore, we're doing this. So as long as we're doing this, just keep getting in and getting out and getting in and getting out. Yeah, any extensions you get, you can take. It's ever so slightly bearish stance at the moment, which has made it hard to get out of some of these trades because it hasn't moved enough. But at the moment, we're stuck sideways, and you know nothing's going anywhere. Pound US dollar, prime example, absolutely nowhere. We've had a bit of a push up. I've got shorts on this one at the moment, just waiting for some US strength. It's in profit. As I said, if we get down to there today, which is within ADR, so it's easily achievable, just needs some ADR, just needs some movement. I'll get out and I'll be done on that one as well. But good chance we'll push down and fill that propulsion or get a reaction at one of those 2 points. So that would be a downside target, but there's no news. I mean, the only thing we could possibly see is Michigan this afternoon moving the market. It's not the end of month. It's not the end of quarter. There's no reason for them to put large moves in today. It is end of week. Michigan, they might use it. They might use it to do that. And if they do, they'll be getting into another position short. No, I won't actually because I've got one on already. Yeah, hopefully we get some movement back down on that one. New Zealand dollar CAD stuck in at the moment. This is the main problem child I have at the moment because we're just getting that. So it's just stuck. We've had 2 days worth of movement since the beginning of the month. So this is going back to the 3rd of May, beginning of the month. We had a news event. We sat there for over a week. Then we had a news event. We sat there for a week. We had a news event. We're sitting here this week. So we've had literally the original move, which I shorted off of. And since then, we've had 2 days of movement and the rest of it's been dead flat. So you can't get out of it. You can't do anything with it. It's just stuck. So all I want is an ADR. Yeah, my average is an ADR away. That's all I want. Just need an ADR. One down day. Not too much to ask, is it? But we're not getting it. So stuck sideways. New Zealand Swiss. Swiss franc, all Swiss francs are weak at the moment. So everything taking advantage of the Swiss. There's no real reason for any safe haven runs at the moment. So yeah, push back down either into this accumulation or into that propulsion move at some point. Been extended. So if you're in this, you probably haven't had a chance to get out of it yet. Like a lot of this stuff, it's just grindy and sticky and not going anywhere. So no real, I'm not trading, as I say, the Swiss at the minute because it's just flip-flopping and just useless. No strength whatsoever. You only want to be really longing against the Swiss franc at the moment, but there's nothing particularly bullish out there that you can look at and say, right, that's what I want to be long on, because everything's waiting for interest rates to come down, which means everything is bearish and at some point is going to go. So you don't There's nothing you really want to look at and go, that's a long. So it's just stuff is grinding. It's whatever's strongest at the time, which is how the Forex market obviously works, is able to push. But the other currency where you would normally find news events and things to push back on, we're just not getting the pushbacks at the moment because there's no strength in anything. So something gets a bit of strength for a little bit and then it just goes sideways. Hence this. But at some point, that bias will change. They will start to pile out of these moves. But it just takes forever. Everything just takes forever at the moment. It's just like pulling teeth, as they say. New Zealand, US, again, sideways. It's the same as the New Zealand dollar CAD, basically. News, nothing. News, nothing. News got undone. Yeah, I'm at break even on it. I want an ADR to get out. You can see my target is there. So yeah, a down day. Just want a down day on it. So some strength on the US would be nice. US dollar CAD, first short taken yesterday on this one. It's not really enough money, but Michigan might move it. We'll see. But yeah, so nice RSI extension to the upside. So as you can see this, I've been shorting it, longing it, shorting it, longing it. I'm shorting it now. It's just going up and down. It's brilliant. It's lovely. Just making money on this thing constantly. So picking a target on it's very difficult, somewhere in this range. So there's no real obvious propulsion gaps. There's that little one there. There's that little one there, but they're not really big. We're getting the reaction, the sell point out of that high. So yeah, to there. But as you can see, we're making lower highs. So if this is going to be a lower high, we'll go for a lower low. If market structure is going to continue in its current vein, you'll be down here somewhere. But that's going to take weeks, and I can't be bothered to sit in it for weeks. So I shall be out somewhere in here. US dollar Swiss, again, very much the same as the rest of the Swiss francs. It's just being pushed around by US dollar movement. We had a V-shaped recovery there. We had a A-shaped recovery there. Doesn't matter which way you get into this one. It's sideways. It's just forming different sizes of range. But there's no bias long. There's no bias short. It's more bullish than bearish from a fundamental perspective at the moment because the US is not going to change their interest rates. But as you can see, big news event, Swiss franc, nothing. Big news event, US, nothing. Yeah, it's just going to undo all the moves that it does unless it's something that is, you know, fundamentally, oh my God, that's not happening. Inflation figures being different to what we were expecting, for example. So yeah, it's just sideways, isn't it, at the moment? So longs or shorts, really. You had a short entry there, which you would still be in. You had a short entry there if you didn't take that one, which you're still in. You're probably going to sit in this for a few more days before it pushes up into this propulsion gap, in which case you'll probably get another short entry. But when it gets up to there, it will probably undo that leg. But how long it will take, because the problem is we get these weeks where we just don't do anything at the moment. We just sit there for a week doing nothing. And you have to sit there and do nothing with it. So every opportunity to get money, just stick it in the bank because and put it back on again. Yeah. So, you know, this is what I did with that Euro US. Yeah, I got that entry there and took it off there because there was a news event coming out that could have just driven it the opposite direction. But look at, even if I'd have left that on and hadn't taken it off there, my average would have been there. That wouldn't have been enough really to get out. I still needed to wait to get all the way back down to here to actually make any decent money out of it. But it took 1, 2, 3, 4, 5, 6, 7 days, a week and a half of trading just to get a move, which ended up being 85 pips to ADR. Just so slow at the minute. Everything's just so slow. And that was a perfect exit today. Look. Well, could have been better. Could have got out there yesterday. But just now we come back up into that propulsion gap and probably sell out of that because we're making lower highs. That's not going to be enough to get you an RSI extension. It's not going to be enough to hit ADR. It's just so difficult to find entries at the moment because things are just not. There's no momentum anywhere, is it? So there we go. And obviously US dollar yen, we've covered the problem child. Good morning. Nice it is weekend. Yes. Like weekends. Morning, Ted. What is your aggressive drawdown percent on your PTEA? 3%. So I'm using 3% at the moment. Just because I don't really have enough faith in stuff coming down hard or pushing hard. So if I get into 3% in drawdown on something, I want to get out of it quick because I just don't want to sit in it. Yeah. So I'm up 8% on the month. It's been a very difficult month again. But I'm doing automatic drawdown control at the moment. And I'm doing automatic aggressive drawdown control. So pound CAD, that will be on aggressive at the moment. So the next position on the pound CAD I take will be aggressive. But it's not going to be, as you can see, aggressive short. It's not going to be until we get above that level up there. And the way this market is moving, that could take 2 or 3 days. So if it's going to give me a couple of down days, I want this average. I'd rather take losses regularly and have a very small profit month at the moment, but have the opportunity to make a big amount of money on a news event that drops 150 ADR. That's the way I think it needs to be played at the moment because it's just not moving. Yeah, 2 or 3 weeks we sit there doing absolutely nothing. You've got to get sizing on big enough to get out of things quickly and take small amounts of money. But it's just a grindy, horrible market at the moment. It's just no fun. You can't do anything with moves like this. And we're seeing so much of this type of price action at the moment. Yeah, there's no bias on it. It's it's kind of should be a short against should be fairly strong-ish because of the US. Yet it just grinds in the opposite direction, and it will grind back down again. But stuff just goes on and on and on. Depressing. I'm looking forward to having a week off, so I don't have to look at it. Under my point of view, the central banks are not going to reduce interest rates until Powell gives them permission. No. They won't. No. That's what we're waiting for, isn't it? We're waiting for Powell to drop the hammer at some point, probably next year. So that makes the US sort of slightly bullish because they don't drop interest rates and everybody else does. Everything becomes bearish against the US. So, but yeah, they're not. No, that's kind of stating the obvious, really, isn't it? Central banks are not going to reduce interest rates until Powell gives them permission. You're talking about the bank of the US banks. The UK and all the other banks have got nothing to do with Powell. They do their own thing. Yeah, the Swiss have already dropped their interest rates. Yeah, the Euro are dropping their interest rates next month. They don't need Powell's permission to do that. It's got bugger all to do with them. US doesn't run us. We run us. So, us dropping our rates is what we need to do in our country to keep our economy going. What the US need to do, because they've screwed it royally, is up to them, isn't it? But Powell obviously is the person that dictates rates. So for the US, but everybody has said everybody has said in Financial Juice, if you pay attention to Financial Juice, all the countries actually have said that they have uncoupled themselves from the US. We normally wait for the US to drop rates before we drop rates. We normally wait for the US to raise rates before we raise rates. Everybody, every central bank, I'm not going to be able to find it now. I don't know why I'm scrolling back. But every central bank has said, we don't care what the US is doing. We're doing our thing because we have to. Yeah, if this interest rate if this inflation figure drops down to 1%, we're in massive trouble. If you can't get your interest rate down, US, sorry about that, but we ain't waiting for you. Yeah. If you value yourself massively high, no problem. We won't buy stuff from you anymore. We'll buy it from somewhere else. We have other people selling stuff. Yeah, it just doesn't matter anymore. What economies have got to do is get COVID recovery complete. Yeah, and they are each for their own at the moment. Trade deals are less important than keeping the country afloat. So, especially when you've got elections coming up. We've got European parliamentary elections in 2 weeks. We've got elections in the UK on the 4th of July. Why they picked the 4th of July, I don't know. American holiday. It's going to be an interesting day for trading, isn't it? Yeah, but at some point they will come down. But the US, again, if you look at financial juice yesterday, we had, I think it was, who was it yesterday? Bostic. It would not surprise me if it took longer to get to 2% inflation in the US than elsewhere. Yeah. We ain't doing anything. We've stuffed it, guys. Really sorry. We can't do interest rates this year. The rest of the world cannot wait. Ours, we're doing a really good job. Sorry, America. You screwed it. Can't help you. Bit like Japan. Sorry, Japan. You've screwed it. Can't help you. They're all stuffed. Each for their own at the moment. What we need is a good war. That will shake everything up. Probably going to happen, isn't it? Kiwi CAD, we've already looked at that. Mustafa, what about sell on the euro pound? Yeah. I'd rather be selling it than buying it, but at the moment I'm long. So I'll be out of that. Hopefully. I'm really nice if we can get an ADR hit on this today, but there's no real reason. It's looking all right at the moment, isn't it? If we can break that high from the news, which is yesterday's high, which obviously they sold again. If we can break that, the next stop is here. So I'll take a break even exit on it because I've already made money on it. So, but yeah, I want to be selling it ideally. I mean, it could well, you know, we've got a week and a half-ish until interest rates drop. I was expecting the market to sell the euro off a lot harder than it has. So I get the feeling that interest rate change isn't going to make a huge parabolic move on the euro. I think it's going to be very orderly on the way down. But we'll see. We have to wait and see. Nobody knows what's going on anywhere. Grinding is the perfect word to describe what's going on. It is. Perfect word. Yeah. Grindy. It's a horrible grindy market. And these ADRs are just unbelievable. You know, it's like 50 Aussie CAD, 50 ADR, 36 ADR, 42, 52, 31, 69, 86, 75. It's nothing over 100 until you get to the pound yen and the pound New Zealand, which typically trades 3 to 4 times that range. It's just pitiful. It's news. I mean, and this is also these ADR figures, that 114 includes a new spike, yeah, which was 183 pips. So that 114 average daily range includes a 200 pip day. Imagine if we didn't have that new spike. You'd be sub 100 on the pound New Zealand. Never seen it. Never seen it. You know, I've shown this before in here. You know, with ADR. If you look at ADR, I used to be trading. I've got to go back a bit further. I know it's 2017. Yeah. You know, pound New Zealand used to trade very, very nicely up at those levels, and that is that's the 300 roughly. So 350s, 400s. Sustainably 300 ADRs. Yeah, look at us. That's where we are and have been over the last sort of, well, since COVID, basically. Yeah. It's like COVID sucked the life out of the financial markets. And these interest rates now are sucking the life out of a market that's had the life sucked out of it. Look at where we are at ADR here. And this is going back nearly a decade. Can't really see back there, but yeah, there's been 1, 2, 3, 4 times in the last decade where we've had contracted ranges this small, and we got all the way down to here. This little low here, we've never had contraction that small. Yeah, the market has just stopped moving. It's awful. You know, this is what the Tom did a little study. Tom Hugard did a little study on the DAX. It's trading 35% less than it was last year, and last year it was trading less than it was the year before. It's almost like the entire market is in a symmetrical triangle contraction. It's going to pop soon, hopefully, because if it doesn't, this is the new norm. We're all going to have to really adjust the way we trade, because if this is the new norm, it's becoming a lot more difficult to extract cash at this thing. Yeah, if it starts to move less, you have to target less. The way it works. Yeah, not fun. Sorry, I meant your lot size for aggressive. 75%. So I use 75% on aggressive drawdown control. So whatever lot size I've got on is 75% of my total position size. And obviously uses a stop loss, which is an ADR. Half an ADR. Something like that. I can't remember. I'll have to look at the manual. If you respect the rule, 2 trades per currency, you said you use 0.06 lots for 6K. What lot size do you use if you open multiple trades? Same. The EA does all the calculation for lot sizing. So 0.01 to 0.03 per 1,000 in your account is a good starting point, but you should be adjusting your lot size dynamically for every instrument because it's all got different lot sizes. So that's what EAs are for, taking all the complex calculations out of everything. That the EAs do it all. But if you're going to trade more than 2, so if you're talking about exposure, if you're going to get into more than 2 exposures on a currency, ideally you want to reduce your lot size by 50%. So if you're going to, the rule in the bootcamp is 2 trades per instrument, yeah, or 2 positions. So if you're in euro US dollar and you're in pound US dollar, you don't trade any more US dollar. If you're going to trade more US dollar, you need to reduce your risk because obviously you're overexposing yourself on US dollar movement. If US dollar goes against you, you've got more size on than you should have. But it's more of a guideline than a rule. Yeah, if you want to trade everything, trade everything. Just reduce your risk on everything by 50%, 60%. Some people are reducing their risk by 75% and trading everything. Nothing wrong with that. You just have more positions to manage. You're using RSI 75-25. No, I'm using 70-30 now at the moment because it's not moving much. So I've reduced to 70-30. But use what you like. I don't know. This is, I keep saying this. I don't know what's right, what's wrong. I don't know what's best. What I know is extensions work. I don't know which. I don't know which is the one you want to use at the moment. I don't know whether you should be using a 14, a 21, or a 28 RSI. I don't know whether you should use a 30, a 70, 30-70, an 80-20, or a 90-10. I have no clue because I do not have a crystal ball. At the moment, I'm using 70-30 because I've been struggling to get into positions at 75-25. And if it gets to 70-30 and it retraces, I got a chance to make a bit of money. But I'm also getting in earlier than if I got in here, which means that my squeezes will be stronger if they happen. I don't know what's going to happen. You just got to pick one. Don't concentrate on what's right, what's wrong. You can backtest until you're blue in the face. They all work. They will all fail at some point. Yeah. All backtesting is going to show you is roughly what may happen in the future. It's just pick one. What you're comfortable with. If you are the type of person that wants to get in only a few times a month, if you went to the 4 hour and used a 90-10, you would have a massively high strike rate and you would be very rarely exposed. There's not even any entries on that one. There you go. You'd have got long there. But that's the only trade you'd have had. You wouldn't have had one there. Oh, yeah, yes, you would. You'd have shorted that. Yeah. It's down to you as an individual. If you want only A+ setups and you want to get in high risk, you use a higher time frame with a high extension. If you want to be in the market all the time because you need to be in the market all the time, you're going to use a lower setting on your instruments and you're going to be in more. But the chances of it pushing, if it gets up to there, you're going to be in really early, aren't you? There's no right or wrong. A happy median is the 80. And using an 80-20, you'll get into a lot less trouble. You'll get into a lot less squeezes. You'll get into a lot less drawdown, but you'll make a lot less money. So you could go with a much higher percentage risk per initial entry at those levels. But then you're going to go into drawdown faster if it does squeeze further. Like that. Perfect. That. Perfect. That's it. Those are the only 2 entries you had on this instrument this year. 2 trades. But you got in 1, 2 out, 1 out. 100% strike rate. But can you sit there for a month and 6 weeks without taking a trade? What are you going to do? But if you got in with 2% risk here instead of 0.5% over an ADR, nice little payday, both of those. But you wouldn't have held it for an entire week. I doubt, or month rather. That's a month. You wouldn't have held it for a month, would you? Or would you? I don't know. See, I mean, you as a trader, you can backtest this. If you use the Position Trader EA or the Market Reversal Alerts EA and use an 80-20 RSI on the 4 hour, 14 RSI, it's absolutely brilliant. And I've pinpointed this before in live rooms. Yeah, it is the setting, like as close as you're going to get to the Holy Grail. So there was an entry there. Now, this is the thing. It took weeks to get that, but that's a nice little payday. You got in there, you scaled into that move and you got out. That was all right. You got in there, beautiful. You got in there. You got out. If you didn't get out, you had that blip, which was a safe haven run, but you know, you got out. And then you had an entry that you're in now. Not perfect, is it? But it's a lot better than the 70-30, which gets you into more trouble on the 4 hour. But there is no perfect. About the daily RSI 2, how did you do it on M5 entries? Well, whatever you want. I don't understand the question. So if you're using the Position Trader EA, that uses moving average entries, doesn't it? Harold, I enter my aggressives based on 80-20 RSI. Yeah, that's a good way of doing it. If you get to 80-20 RSI, start getting aggressive drawdown control. I've never tested that, never tried it. But yeah, that wouldn't be a bad idea, would it? So if you look at my New Zealand dollar CAD at the moment, what I should have done, if you're using that, I should have taken an aggressive drawdown control entry there. That would have failed and stopped out in that case. There's an entry there as well. It's good. But it's also not good. DAX hedge exits. It's gone long, is it? I'm 3R basically, so that's my exit. Lovely break on the FTSE this morning. Nice clean break. Didn't get on that, unfortunately, because the market moved too fast. Couldn't get in. So yeah, 3R on the DAX. About to get out in a minute. I'm surprised the DAX is going up. The euro is pushing at the moment, isn't it? Could you add this to the PTEA? I don't really want to, because I'm just adding more functionality that no one else will use. You're the only person that's ever mentioned that ever on the planet of Earth that I've been doing these live rooms for 5 years. I'm not going to put something in the EA just for one person. Aggressive drawdown control in the EAs, in the position trader EA and in the market reverse alerts EA is there because people want it. I do not think you should use it. Yeah. Aggressive drawdown control should be actioned at support and resistance. Yeah. Because you are going to be using a stop loss. So just because a line on an indicator gets above a level is not a reason to take an aggressive trade. An aggressive trade should always be taken when you have limit orders to back it up. Yeah. Banks and institutions are selling that level. That is where you get aggressive. Yeah. I have it set on mine at the moment to get into automatic aggressive drawdown control because I am doing automatic drawdown control as well. Normally I wouldn't do that either. But at the moment I am, because this thing is just so slow. But yeah, I'm not going to put aggressive drawdown control in at a specific point on a specific indicator because it's random. You will find it gets into trouble at some point. Let's say you get a parabolic push from 70 to 90 on the RSI and you're in 2 positions. Why are you taking aggressive drawdown control on 2 positions? You're not in drawdown. That will automatically take drawdown control for you in 1 position. Yeah. So if you get, let's say, for example, you got into a short here. Yeah. And then it pushed up to here. What you're saying is the EA should be taking aggressive drawdown control positions there. But I'm only in 1 position and it's only in a half an ADR, 0.5% of drawdown. Why would I get an aggressive on my second entry? That's not good. You're just massively over leveraging. What if this thing spikes up above 90 for 3 days? What are you going to do? Aggressive loss, aggressive loss, aggressive loss. It's just going to hemorrhage cash. Yeah. Not, if I did build it in there and you did backtest it, you would soon not use it. Just hurt. 31k profits. Good job. But if it's based on 3.5% drawdown to getting aggressive, that's what it's getting in on, isn't it? It's nothing to do with the RSI. It's a coincidence, Harold. You will learn after such a long time in trading that there's a lot of coincidences in this. A lot of instruments will tell you the same thing. When you get to 3% in drawdown, quite often, yes, you will be over that level, but not because of any other reason than the market's been going in that direction. There's a million reasons to press the button to go aggressive. Yeah. That's the best one, always. I can't build in support and resistance into the EA because it's discretionary. That's what you should be using. So it wouldn't be a good thing to add. But, you know, since January, yeah, now go test it 10 years, Harold, and then come back and tell me it's amazing. Yeah, 3 or 4 months worth of testing is a absolute blink of an eye. If you backtest something over 3 months or 4 months, 31K profit since January, fantastic. Go and do that system over 10 years. Show me the profit curve. It's I can't stress enough how much backtesting is important to do it over long periods of time and different market conditions. You're backtesting something in a flat market that nobody's ever seen for 20 years. Yeah. I've just shown you the ADRs. We haven't had ADRs this contracted ever. Yeah. We've never had a pandemic recovery ever. We've never had a war kicking off during a pandemic recovery ever. We've never had an interest rate rally so fast ever, from 0 to 5. We've never had interest rate inflation drive from 0 to 11% ever. We've never had a 12-month interest rate freeze ever before a drop, which is going to take us back to where? Don't know. Yeah. This market, we've never traded it before. So what works now is going to be different next year. Yeah. So you can't use that. It's had a lucky run for 3 months. It's not going to work. But you could build an EA to do that if you wanted to. You can build. You can build EAs to interact with your trades very, very easily. Yeah. So trades use magic. EAs use magic numbers. So if you wanted to build yourself an EA that said, if my trades are over X% in drawdown, yeah, and the RSI is above X on X time frame, then if a trade is taken, double that lot size, you can have another EA running that alongside the position trader EA, the market reversal alerts EA, or anything. Yeah. All EAs do is something you ask them to do. So you could easily build something that just handles your version of aggressive drawdown control. But the problem is, if I start adding all this sort of stuff into my EAs, it will end up like the market reverse alerts EA. I've been asked for 100 features for the position trader EA in Telegram. Yeah. If I start adding them all, it will grind to a halt and it will become confusing because there'll be 2,000 inputs like there is on the market reverse alerts EA, and everyone will go, well, which is the best one to use? And that's all ever I get asked. What's the best set file? I don't know. It does a job. It gets in on a condition, and then it gets out on a condition, and it does stuff in between. Which is the best to use? I don't know. I don't know whether it's best to use half an ADR, 3/4 an ADR. I don't know whether you should use a 1.3 lot multiplier or a 1 lot multiplier, because I don't know what's going to happen. And yes, I can look and say when it gets up to there, it comes down a lot. But how far is it going to come down? And should I get in aggressive? I don't know, because the next time it gets to that level, it might go embedded and then parabolic. And if I get in aggressive there, I'm just going to get aggressive. It's a stop loss strategy. Don't forget, aggressive drawdown control uses a stop loss. Yeah. You do not want to be using it willy-nilly. That's a really silly thing to say, but you don't want to be using it just as part of your trading, because it uses something that hemorrhages cash from your account, a stop. So you've got to be very careful with it and very, when I have something that goes into aggressive mode, like New Zealand dollar CAD at the moment. Yeah. So when this is in aggressive mode, there we go. I was going to say, why is it not telling me? So when that is on screen, aggressive short mode active, I watch it like a hawk, because if it pushes up to there and it takes a trade, it's going to put an automatic stop loss on my account. I am going to be adjusting that, watching that, making sure it's putting that where I want it, because I do not want to do it automatically. But in this particular case, if price pushes above that level and it does take an aggressive short for me, spot on. I would have been doing this myself manually anyway, because that is exactly where I want to be aggressive, because the market hasn't achieved above that price for over a year, pretty much. Yeah. So this is exactly where you want aggressive. And when you're getting aggressive, this pushes up really, really fast, and you can get out with a massive amount of money. But it's so dangerous, aggressive drawdown control. because it uses a stop loss. We know stops are dangerous because they just get taken out. Drawdown control is dangerous. Look at that. Price never even got there. My broker decided it didn't fancy having me in anymore. Just took some of my money away. Yeah, any kind of exit in drawdown is not good, is it? Loses money. We don't want to lose money. Pretty much since summer last year, we've been contracted. Yeah. Since the interest rates stopped going up. This is the thing. This is what I'm saying. It's a 12-month interest rate freeze. This is why these markets are stuck. Look at the interest rates. So last interest rate rise was May 2024. We went to 5.5. We have not moved since May 2024. That's when we all stopped doing interest rates. Yeah. So the market is now going, all right, so we're not going to get any more bullish. We'll stop buying it. When are we coming down? And that's the problem. The banks can't tell us because they're all looking at inflation going, yeah, it's not quite there yet. Yeah, it's not quite there yet. Yeah, it's not quite there yet. So all you're getting is the market going, are we? Oh, are we? Oh, are we? Oh. And this is just horrible to trade. This is not normal. Normally, go back to COVID, pre-COVID, these things would change independently all the time. Yeah, so Aussie would put their interest rates up, pound wouldn't bother, the US would drop it by a quarter, the Swiss would up it by 0.1, the Japanese would never change it. But everybody was doing things independently in the past, which gave you a bias. Yeah, the pound was bullish for that month and the US dollar was bearish for that month. And then the bank said, we're not going to change it next month, but we'll see what happens with inflation. We might put it up by 0.25%. And then this happened, that happened, and everything moved. What we've had since COVID is, holy crap, how are we going to pay for this? Raise interest rates. Stop doing interest rates. And now we're waiting for the drop interest rates. Yeah. So lovely rallies, market structure, everything happy, everything bullish. You knew exactly which way the market was going. Nobody's got a bloody clue all year. That's the situation we're in. So that's why the markets are contracted, because nobody wants to put any risk on because we don't know where anything's going. It will. It'll all kick off. But, and the thing is, this interest rate rally, look. So there's July 2021 after COVID. 0.25, yeah. 0.25, 0.5, 0.75, 1, 1.5, 2, 2.5, 3, 3.5, 4.25, 4.75, 5.25, 5.5. Interest rate rally. That's what we've got coming, but opposite direction. But they are not going to come down that fast as they've gone up, which should, in theory, give us lovely, normal market movement, because there'll be lots of little shocks in there where we were expecting a 0.25% drop and we didn't get it just because CPI popped up by 0.1 and we were a little bit scared. If it goes down by 0.3, and this is what the banks will be able to say, if inflation drops by X or maintains this level, we will do this then, because they will have a plan. Now they know what's happening with inflation and it's under control. That was, we haven't got a clue. It's out of control. What the hell do we do? The only thing we can do is just keep sticking this up until it stops. It stopped. But it hasn't come down enough, or at all in some cases. Well, it has come down a bit, but not, some of these inflation targets are still miles off, aren't they? 3.6, targets 2. 4, targets 2. 3.4, targets 2. Targets 2, 2.4, 2.3. Euro and pound starting to drop. CAD 2.7, better than the US, but you can guarantee that the CAD will not drop before the US. Too dangerous, too close trade partners, oil, everything. They're going to struggle to drop theirs. They're the only ones really, I think, are probably still tied to the US. Everyone else has just gone, screw you, we've got to go. Sorry. If you can't get that down, it's not our problem. Yes, it's going to hurt us. Yes, we do a lot of trade in the US. And if that US remains high and ours comes down, it's going to cost us a lot of money. But at the end of the day, if this drops, it's going to cost us more. So you've got to get that down. And that's where it's all going to start to expand. Those ADRs, when you look at the ADR dashboard, in 6 months' time, we'll be on here. Clip this on the 24th of May. In 6 months' time, we'll be on here. these ADRs that are now all below 100, apart from those two, they will all be over 100. This market will be moving. And if it isn't, something's very, very wrong with Forex. What it is, I don't know. But this is not the norm at the moment. This is why it's so difficult to extract money from this market, because it's just not moving in the way that it normally does. But it will come back at some point in the future. That's still pushing. Yep. I'm waiting to get into a short. So there's a couple of resistance levels above where we are. So we've just taken out that high. It isn't really a high because it's pre-market data, but yeah, we've sold off hard yesterday and broken support. So this area is your support. So we're retesting this support now. So up to there. So you could look at 3/4 of an ADR, a bit more upside, coming up into there. Potentially. We will see. I got into these yens to get some of my money back on it. But it's just gone sideways. How do you deal with that? FOMO. I don't know. I think the only way to deal with FOMO is by being burnt by it. I don't have fear of missing out anymore. And I haven't had it for years because I had it and I got hurt every time I tried to do it. This trade on this US dollar yen, yeah, so I took a loss on the US dollar yen here and I pulled the plug on it and took a decent loss. I said, didn't I, on that pullback, I'm going to get in a short because I think there's another intervention coming. And I shorted that and I made, did I make it all back? I did. I made it all back and a little bit because I also took a loss on another pair. But I made it all, pretty much all back on that. That was a FOMO trade, and it's probably the last FOMO trade, the first FOMO trade I've taken for a very, very, very long time. But it had a fundamental behind it. That's why I took it. Because I thought, if I hadn't have taken that loss, I wouldn't have taken that. And that was a very risky trade. There was a good chance of me losing another 5% on that, but I didn't. I made it all back. It was about 11%, I think, made on that, something like that. But fear of missing out, basically, most of the time when you take a trade because you're worried about missing that move, it doesn't happen and you get hurt. So you realize that they are just the same odds as everything else, 50-50. And you just stop taking them. Because, and this is why I trade everything, there is another opportunity coming. Yeah. This dashboard, after you've used it for a few weeks, you realize that it sits like this on the hourly for a long time, for days. Nothing happens. And then it lights up like a Christmas tree and 10 it's like buses. 10 come along at once. Yeah, you stand there at a bus stop for half an hour and then 3 buses turn up. And that's what trading's like. If you start getting into trades because you're worried you're going to miss the next move because the market's not moving, if it's flat, for example, and you get in because, oh, well, that's almost got there, I'll just take a short. They're always the ones that go wrong because you've got a system or a strategy that is proven over time to work. This isn't proven over time to work. Taking trades when there's nothing lit up, because if the market hasn't moved, it's got no reason to retrace. So you go, oh, well, I might take a breakout then. Well, you're not a breakout trader. Why are you suddenly picking another strategy? Well, because I might miss out on the next move. Do it then. Oh, it didn't work. I've lost 1%. Oh, it didn't work. I've lost 1%. No, what you should have done is waited for the RSI extension. We just got lit up down here and taken that. but you couldn't wait for it. It's just, I don't think there's a solution to fear of missing out on a trade, because that is your human instinct. And this is why I try to remove all emotion from trading by using automation. And I try to remove your psychology from trading, because you can't control your psychology. It's very, 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 very hard to change yourself as a human being. But it's very easy to remove stop losses from your trading and let the market move up and down. The thing that causes FOMO, the thing that causes traders to jump system to system to system and cause traders to make stupid mistakes is loss. Loss is part of trading, but nobody said you've got to take a loss every time you take a trade. That causes all the psychological and emotional problems every trader has. That's what the first part of the bootcamp is all about, isn't it? I'm pretty sure if I click on the link, it's going to be there, because it's the slide I use all the time, and it causes every problem every trader has. It's right at the beginning for a change, look. But every single one of these issues, is all caused by one thing: stop loss. Fear of missing out. Well, I tried to get in, I stopped out. I can't miss the next one. I've got to get these 3 back. I've got to get in. No, you haven't. System hopping. That system didn't work. No, that system worked fine. You just placed an order to get out the market with a loss. If you'd have left it, it would have come back down again. Nothing wrong with the system. It's just got in a little bit early, isn't it? The next one will work. The next one will work. It doesn't work. The next one works, and it makes back all of that plus 20%. But you miss that because you hopped. Trying to pick the top and bottom of a range. Yeah. Ranges are never, ever, very rarely, identical. You find a range. Yeah, we've got a range here. There's the range high. That's now the new range high. That's now the new range high. That then turned into the range high. That was the range low. That was a little bit higher than the range low there. That was a little bit lower than the range low there. That was a little bit higher than that previous range low. Then we had a higher range low put in. How are you going to pick the top and bottom of something that moves at random and picks a different price every time it turns? You can't. So you can't do that either. Trying to pick the pullback on a trend. Something moves up, it pulls back. What does it pull back? 30, 50, 61.8, 71.9? Does it do an A-shaped recovery and then go? You're never going to pick that because it's random. Yeah. So you can't do that either. Get stopped out all the time on most of your entries. Well, that just goes back to all the others, isn't it? The reason you get stopped out is because you put an order in the market to tell the market to go and hit your order and take you out. What do you think is going to happen if you put an order in the market? It's going to get filled at some point. If that order is a negative order to make a loss on your account, that is what's going to happen. If you get into a trade, it works, and you put a break-even stop in place, it's going to come back to that break-even stop and execute your order. What are you going to get? A break-even. Why? Because that's what you asked for. Obvious. It's really, really obvious when you think about it, isn't it? Yeah. Not being able to hold on to winning trades. Usually because you've taken a loss, a loss, a loss, a loss, because you're going short. And now it goes down. You get to break even and you go, it goes 10 times further, but you get out because you took all these losses. Yeah. Getting in just as the market turns the other way. Well, that's obvious, isn't it? Because the market's random and you can't pick where it's going to turn. Let's go back to the previous one, isn't it? Moving to break even and getting stopped out. I've covered that. Revenge trading because the market owes you. That's part of fear of missing out, isn't it? Using candlestick patterns that just don't work consistently, because all a candlestick pattern is showing you something has happened in the past. It's got nothing to do with the next candlestick at all. There are some that work, but most of them don't. Bullish and bearish engulfings, everybody's been there. Shooting stars, hammers, everybody's been there. 3 up days, 3 down days, everybody's been there. 3-bar reversals, not many people have been there because it's a 3-bar pattern and it doesn't happen very often. Oh, I need to be in the market. Can't wait for that. Fine. But all of this affects your psychology. You cannot change your psychology. You can stop all of this by just getting into the market and getting out at a later stage. And it all comes down to this fear of missing out. I don't think there is a solution. I've been trading for 16 years now. I haven't changed this. I can't change this. If I use a stop loss, I'm immediately scared because I know the probabilities of getting stopped out are extremely high. When I get an aggressive drawdown control on, I'm like, and I watch it like a hawk and I adjust it and I do that stuff. I put it to break even quick and it does get broke even. And then it does go where I wanted. And I do get out with a profit, but not using that because I'm too scared, because I can't change my programming. Nobody can. It's very hard. Occasionally you'll find someone that can. And it's like the time frame thing, picking time frames. People always say, what time frame should I trade? Don't know. Try them all. Which one are you more comfortable in? What do you mean comfortable? Well, which one do you trade on and which one do you go, oh, I like that. That's the one. Is it the best one? Don't know. Just moves at random up and down on all of them. But pick one that you feel more comfortable in. If that happens too quick, don't use it. If that happens nicely and you're comfortable in it, use it. If that happens too slow, don't use it. If you want to pick the M30, which I don't even have on my chart, use it. There's nothing wrong with the M30. Use H4 M30 if you want to. I've never tested it. I've never tried it. But if you like it, use it. Because if it makes you comfortable, it's going to stop this thing whirring and making mistakes. Sitting on your hands when nothing's happening. Shut your charts. Walk away. When you get into a trade, shut your charts and don't come back until tomorrow. Because you won't be able to see price action going against you, which means you won't get out the market and you'll let that thing play out to where it should be. All this stuff is not changeable. Everybody's trying to find something that fits into their psychology, but your psychology is always programmed to take money. Do you know how hard it is to look at a P&L? You probably do. That's sitting there with 1,200 profit that I can press a button right now and put 1,000, I've put 600 down there today. I can put another 1,200 down there today. If you look at it, you'll be tempted to do it, which is why I don't have this up most of the time. I have it like this. Because if I watch that thing, I will see a load of money coming. I'll take that money. But I know if I leave that money will get bigger. Shut it. But I can't change the fact that when I look at $1,000, I'm thinking car payment, mortgage payment. Everybody does. That's never going to change. You're not going to change that psychology. It's programmed into you, hard-coded. The only way you're going to get out of all the problems is by removing the thing that causes the problems. Yeah? You want to win. If you want to win, what do you need to do? Stop losing. And something that moves at random, that you cannot predict, and is never doing the same thing 2 days in a row, how could you possibly find something that's going to make you win when you ask it to lose, when you place an order in the market to take the money away from you? Just, it can't be unprogrammed. So there you go. FOMO. There is no answer to it. The reason you're doing FOMO right now is because you think, I think, is probably number 9. Yeah. Japanese yen hurt me. It owes me. Yeah. So you're trying to get back at it. Not letting you, because it's the market and it will stay irrational longer than you can stay liquid. Again, you learn that, which is why I take 10% losses every now and again, because I know if I do not take 10% loss, it will turn into 15, 20, 25, 30, 35, 100. You got to get out sometimes. When it gets too deep, you got to get out. When something is hurting, if something gets into 5, 6%, jump. Go, screw that. That didn't work. What is that equivalent to? 5% loss. I mean, that's in 3% at the moment. But if you get to 5% loss on your account, what's the equivalent of? 1% risk trades using a stop loss. This is no different to normal stop loss trading. We just do not take cuts every day. We take cuts once a quarter, once every 6 months, maybe. The rest of the time, we just let the thing breathe. Banks will take profit unless something changes, which means they do not need to take profit. And if they do not need to take profit, we will get squeezed. And there's nothing we can do about it. You just got to accept it. But do not hemorrhage cash on the way. That's pointless. Because you will be hemorrhaging cash for a long time. And you will keep doing this because every time this happens, the market owes you money. That's your psychology. It's built into us, the fight or flight human psychology, the need to win, the want to win, the need to earn money, make money. When you see money, you take money. That is built in and programmed to you as a human being. You don't know it. A lot of people never even notice it. It's there, and that's why trading is hard. Nothing to do with the fact that you can't find the right system or strategy. It's the fact that you cannot control your emotion of taking money when you see it. And when you see money, it's usually a smaller amount than you lose because you do not want to lose. You hold on to stuff. Holding on to losers and letting winners run. That's stuff, it's the stuff that everybody says, but nobody does. Not adding to losers. Everybody says never add to a loser. Well, then explain to me why that's all the banks ever do. Do I ever see banks losing money? No. Why? Because they just know that it's not going to go on forever and it will come down. That is your control of risk. You will control your risk doing this. You will get into risk. You will get into drawdown. You will use your account's balance for what it's designed for, drawing down into it to produce capital. Same as any other business. You start a business with 100K. The first thing you do is you buy premises, you buy stock, and then you set up your shop and you're 70K in the hole. What's wrong with that? Now you start selling stuff. That's how you make money. This is unrealized profit waiting to go there. But you just don't know when you're going to realize the profit because the market controls that, not you. This is the removal of psychology. The only way I know how to do it. Unless somebody's got the Holy Grail. People contact me all the time. Somebody's messaged me recently. I don't think he's in here today. And he's got a system called the Holy Grail. And I opened his document and I looked at it and I was like, you really have called it the Holy Grail. And it's not a bad system. I can't make it work, but it's not a bad system. But he's called it the Holy Grail because that's what we're all looking for. We're looking to try and find it. It doesn't exist because there's nothing that works all the time. Everything that fails loses money at some point. You can't hold on to it. Like the stock index hedge and the opening range breakout EA, they go through hideous drawdown and stagnation periods. But over a year, 2, 3, 4 years, they make money because they're waiting for the market conditions to suit the strategy. If you just let it run, it will do it. But that letting it run is hard, isn't it? Because we need to be paid. No need to complicate trading. Just keep it simple. Time frame, setup, strategy. Doesn't matter. Just pick one. Master one, trade one. Yeah. Test it, prove it, trade it. When it goes wrong, though, you'll chuck it if it uses a stop. Unless it's a very high time frame. Yeah. So you will find the majority of successful strategies use hourly, 4 hourly and above. The vast majority of successful strategies use daily timeframes. Yeah, because it's the clearest view of the market you can get. And it's incredibly successful. All the big players, every book, we looked yesterday at a book called Market Wizards. Nobody in that book was trading any time frame lower than the daily. All massively successful. Because they did not use stop losses intraday that would just hemorrhage their money. So they got into the market, they saw what happened the following day, and then they made a decision to either get in again or to get out of a portion and wait to get in again. But they didn't wait for the market to go up and down, chopping them to pieces. Yeah, in the 5-minute and the 15-minute timeframes, they didn't get in and put orders in there. So if the market moved up and down each day, which it's been doing since the 1800s, yeah, this is how stupid we are. This thing's been going up and down intraday since the 1800s. Yet we decide to get in and put an order in there to lose money, knowing full well it's going to go up and down. The ADR indicator I built the ADR indicator to show everybody on the planet that this is what the market does 58% of the time. 42% of the time, it might go up to there or go down to there. But it's going to do this all day. So let's get a strategy where we put an order in there to make a loss every day. Yeah, Market Wizards didn't do that. Market Wizards went onto this time frame and went, right, let's go short. Oh, it went up. All right, well, let's short it again. It went down. All right, that's brilliant. Holy crap, we just made money. Because there is no chop. There's no false signal here. Yeah, if something goes down dramatically, it will go up at some point. If it goes up parabolically, it will come down at some point, because everybody that's in that has to get out of it. Otherwise, they can't make money. When you press the buy button, if you want to take a profit, you are closing that trade. By closing that trade, your platform is pressing the sell button, because there's someone else that wants to buy what you're selling. And when you bought it, there was someone wanted to sell what you bought. Yeah. So if something goes up, by its very nature, the only way that banks, institutions, and market players can actually profit from it is by pressing the opposite button. When they see people pressing the opposite button, the rest of them start to press the opposite button, because every time someone presses the opposite button, your P&L drops. When your P&L drops, that psychology thing I've just been talking about goes, holy crap, that money's going down. I need to take that. So we climb up the stairs because we're all happy and making lots of money and everything's getting bigger and brighter, and we fall down the elevator shaft because we panic. It's been happening for centuries, and it's not going to stop. It's just at the moment, it's just not moving very far, which is why, again, we use ADR, because ADR is dynamic. The average daily range of the last 10 days is what the market is currently doing. Not a lot. All right, well, that means it's probably not going to do a lot today. And then tomorrow, it's probably not going to do a lot. When it starts doing a lot, these lines get further apart, because every day it will do a lot more. That's why we use dynamic indicators, because they've got to change with the market condition. If you don't change with the market condition, you'll be dead. Everybody that uses the same strategy they used on the pound New Zealand dollar 4 years ago, when it was trading at 250 ADR, if they're using that strategy now and they're looking for 250 pips of movement, they're going to be very, very, very bored, aren't they? Because it's only doing 100. So if your target's 200, you're not going to hit it. You've got to change it. You've got to adjust, which is why everything operates that I do on ADR, because that is dynamic. It changes. You've got to change the market. That gives you a little bit more of an advantage than anybody that uses a pip. But you only find out all this stuff after years and years and years of trying everything else and figuring out how this works, why it works, and why stuff doesn't work. The most important lesson you can ever learn is, why doesn't that work? Because if you know how it doesn't work, you won't do that. And that limits it down to the stuff that probably is left. What is left is completely random market movement that goes up and down, which is unmeasurable. All right, so the only thing we can do really is get in and wait. Yeah. Oh, okay. All makes sense, which is what that document is. This explains your entire journey, this document, doesn't it? The 5 steps. You start off completely incompetent, you learn a bit, you eradicate some of the crap, which takes you up to being consciously incompetent. So you're still doing a lot of the stupid things, but you know you're doing the stupid things. Then it brings you to the eureka moment where you go, all that crap doesn't work. So all this little stuff that I was told originally that I ignored because I was looking for the Lamborghini is what I should be doing. So you start doing it, and then you suddenly become a bit profitable. And you go, brilliant, let's up the risk. Then you get hit by the market and you go back to step 1 and you go, I get it. Then you move on to autopilot, which is basically sitting there doing nothing and making this monotonous job interesting by doing something like streaming on YouTube. Because otherwise, I sit here all day doing absolutely nothing and I don't talk to anybody because I don't have any work colleagues. The reality of trading is such a mind-numbingly boring job, isn't it? Sitting here, watching this, do that for an entire week. I would never recommend this to anybody as a job. Position trading is the coolest thing there is. Closest thing there is to the Holy Grail, yeah. But it's nothing new. I'm not doing anything new. I'm just doing what the banks have been doing for decades. That's all I'm doing. And I don't get it right. Because you can't get it right, can you? You have to get it wrong to get it right. Yeah. When I press a button in one direction, if it goes straight down to target within 24 hours, I'm like, that was lucky. That doesn't happen normally. What happens normally is you get in and the market goes, meh. And then you get in again and the market goes, meh. You go, thanks. 4 days later. Tell it's a Friday. Yes, but in the follow-up books, he writes about other very successful futures day traders. Yeah, there are a few people that trade intraday. Banks and institutions trade intraday. Yeah, they teach you the ladder, but the ladder is taking ticks using liquidity that is ahead of the queue. Yeah, they have a competitive advantage, so they can do intraday stuff. But banks do not use stop losses. They use stop and reverse. Always in strategies. You're always in the market. Yeah, it's either going up or down. You're always in. You're not getting in, out, loss, sit, wait, in, out, loss, sit, wait, in, out, profit. You flip and reverse. Yeah. This is what limit orders are. You place a limit, you place a limit, you place a limit. It works. You take it at a point where you flip and reverse. You scale in, you flip and reverse. It goes up, you take it. You play intraday movement. And this is what intraday movement is. It's banks and institutions moving price up and down to generate profit. You can't do this. There's a very small amount of people. I think this is where there's this statistic out there. 5% of people make it. I think those 5% of people are the people with the mindset that is mathematically focused on success rather than money. There's very few people that get into this to make it work. Most people get in it to make a load of money. You can't make a load of money unless you have a load of money. People have got the wrong mindset. The day they open their first chart, they're like, I'm going to make some money in the markets. No, you're not. You're not. You're going to spend 10 years trying to figure out how this thing works. What are you going to do? What was it like when you first realized position trading actually works? It was when I turned from a break-even trader to a profitable trader. I don't know. It's difficult to pinpoint because I, as probably most people, have never done one strategy. I've always been doing things, lots of things, following lots of people, doing lots of courses, doing all sorts of stuff. So I've always had multiple things running alongside each other. Yeah. So, and I think it's a good thing to do, to run multiple strategies, because you get lots of information about what does and doesn't work all the time. So at the time I was starting position trading, it was a variation on a strategy that used mean reversions and Bollinger Bands, which was a variation on a strategy which uses moving averages. So I kind of adapted stuff and running lots of things. And this thing was sitting there being traded manually every day by me, watching things. This is why I started building the dashboards initially, because I wanted to make that easier to do while I was doing other things. And pressing buttons, not focusing on it, closing it out, pressing button, focusing on something else, closing it out. And suddenly you go, this is working. That's the light bulb moment. It's like, why is that working? It's not using a stop loss. Everything else is using a stop loss. This stop and reverse strategy just keeps going and hemorrhaging cash in ranges. That doesn't work. And that's what you do. You just piece things together. But then you start looking into it further and it's like, well, this is all the banks are doing. Yeah. If you watched Bloomberg the very first day you traded and you watched the market recap on a Friday on Bloomberg and you watched them interview the hedge fund managers and portfolio managers and the guys that works in the banks, you just hear them talking about DCA all the time. They talk about dollar cost averaging all the time. They talk about their position. They get asked. So the person sits there and goes, what's your position on gold at the moment? We're long. Yeah. They don't ask, what's your entry? Where's your stop loss? Where's your take profit on gold? What's your position? I'm long. Right, where did you get in? Well, we started getting in there. We've been DCAing in, waiting for the pop. That's what they say on Bloomberg. They've been telling us for years how to do it. Just haven't twigged. Yeah, because you think you can't do that because You haven't got the money the banks have got. You've got some money. You just don't use the lot size the banks are using. You use a percentage of your account size. That's it. But everybody's known it all along. You know in your heart that if you put an order in the market that's going to get you out, like this TP here. Yeah. What did I get out of yesterday? Is it? It was on another account. It was the Aussie Swiss I got out of yesterday. Yeah. My TPs yesterday on the Aussie Swiss were here. I've got this running on another account. And I've been in it since here. Actually, it was, oh yeah. No, I've been in it longer than that. Since here. Yeah. Stuck. Yeah. As we all have been. Aggressive drawdown control out here. My TPs were there. My TPs got executed because I placed orders in the market to execute. Yeah. If they had been stop losses, they would have been executed. When you place an order in the market, you are telling your broker to execute that order. This is the light bulb moment for most people. If you don't put the one that makes you lose, you won't lose. Market's still going to do what it does every day, and it's been doing for 200 years. Still going to do this. It's just you're not going to do that. You're only going to do that because you're only going to place orders that are in your benefit, which is what banks do. If they get in there and the market moves up, they have another order there, and they have another order there, and they have another order there. The reason they have those orders there is because they want them executed. They're called limit orders. And this is why candlesticks drive down in market structure, because there's orders placed here. Look. There's orders placed there by the banks that placed that order to keep the price below that level so that they remain profitable. There's orders placed by the banks that made that breakout happen there, here, to push the market that way, to make them profitable. But the guys that don't win that trade will either do one of two things: add another trade and then get out on that move, or they will flip and reverse and go with the guys that have got more money than they've got. That's what happens in banks. Why not do that? That's the light bulb moment. That was for me anyway. But I didn't know this at the time, because at the time, and it happened at the time when I was doing the moving average strategies, I was with a guy that worked in a bank. He was in the forum with me. We were trading this strategy together, and he worked in a bank. And that's where I got the move on to do it that way type thing. But I didn't realize exactly how it worked then. And then obviously looked into it and you figure it out. Still doesn't help you though, does it? Because I still have no idea where they're going to move from. I just know they are. I know after they do that, they do that. When they do it, why they do it, and how much they do it by, no one's ever going to know that. Nobody, not even the bank. They don't know that. They know that they are going to do that, but they don't know how many other banks are going to do that. Therefore, what the distance will be. You don't know what the distance is going to be, but you know where they bought it from. So if that is going to happen, let's get out there in case it happens. If you want to get in now, where's the best place to get in? Somewhere in here. Why? Because that's where they sold it from. So it's either going to do it again or it's not. But get in at the levels that banks and institutions are using only. And you'll have a pretty good chance of making money. But if it doesn't work, don't get out. Wait and get in at the next level. My targets always on everything I'm in are at support, resistance, propulsion. I'm long. Where's my target? Why? Because that's where they sold it from. So when we get back there, if we get back there, they might sell it again. They might not. I don't know. But that makes me green. My job is to do that. My job is not to get the trade exit spot on. That's not my job. My job is to pay my mortgage, buy the kids stuff, to go out for meals, to do stuff on holiday. That's my job. My job isn't getting this spot on and posting it in Telegram going, hey, come and buy my course. You can have trades like this too. It's not my job. It's not your job. Your job is to become profitable. That's it. When you've done it, you realize there's only one way of doing it. Ladder, elevator, black hole. That's a good, yeah, that'll work. Black hole, we could use a black hole, couldn't we? So we will climb up the elevator shaft. That would be hard. Climb up the stairs, fall down the elevator shaft into the black hole, and then we pop out on another currency somewhere else in the universe. Watching too much Star Trek. The biggest earners in at SMB Capital, one of the few proper old style prop firms and short-term traders. Yeah. Biggest earners on Wall Street are the high frequency firms. Yeah. But as you say, you can never compete with them because you cannot trade on the same terms. When you trade futures and you press the button to trade a futures market, that order is filled by a bank. That bank's order is ahead of you in the queue. So this is how HFTs work in banks. Yeah. HFTs and market maker desks are used by the Chicago Mercantile Exchange to execute the orders. So when you say, I want to sell X, they go, no problem, we will. And there's a guy here that wants to buy X. Yeah. They make that regardless. They can't not make that because they make the market makers. Yeah. You cannot compete because you do not have access to the market makers. Institutional traders do, which is why it's a lot easier to make money in those old style prop firms because they've got access to liquidity providers that you're just not going to get. So you can make money in that way on those timeframes using those ladders. We can't. So we have to just wait, which you have to do on these sorts of timeframes, which is why we trade H1, M5 or H4, M5, M15. We're trading H1, H4 because that's as low as you want to go. Any lower, you're just going to get spat out and chewed up by the market. You will have a run, which will work. Yeah. Or you can trade something like the ORB strategy, yeah, which trades M5, but it's trading institutional movement at the open. The edge of this strategy is the parabolic breakout. Is that? Yeah. After that, no idea. Random. But we are trading one candlestick a day. We're trading the 8 a.m. open, 2:30 open. That's it. Rest of it, no idea. We're on the train. You get on the train, it works. Or you get on the train, it doesn't work, you deal with it. But that you sit, you don't get on the train again because you're just going to, you just, no idea where it's going. Hey, look at that massive bearish candle there. Sell it. Oops. Oh, that didn't work. Hey, look, there's a 3-bar reversal on the 5-minute time frame going in. Sell it. Whoops, that didn't work. That's 2% of my account just gone in 40 minutes because the banks are just executing orders for their clients. That's it. That's all they're doing. And you're trying for some reason to predict the future movement of random market orders placed by institutions. Just not possible. But all these people that sell your courses, like the London Breakout strategy, they will tell you they can do it. And they will show you the perfect setup on a chart that you have to look for every day. But you will never find that because it never happens the same day twice in exactly the same way. It just doesn't happen. Go and show me 3 days with exactly the same price action on. The reason you'll never be able to trade those strategies is because you're told to identify a pattern that's never going to happen again. Like head and shoulders pattern. Looks like that. Perfect shoulders, perfect neckline. You take a break short, you put your stop there, you extend 1.5 and you take a profit. Show me a head and shoulders pattern that looks like that. I can show you one on this chart right now that's failed. Doesn't look like that though. The neckline looks like that. The shoulders look like that. That is a head and shoulders. Yeah. Didn't work out, did it? Because your stop was there and it only moved that far. In fact, if you're going to do it properly, you should have taken a neckline break, which should have been shorting it there. Whoops. All that rubbish. Very insightful. Why don't you trade? Why don't you as Lee trade D1 personally psychology? Because I don't need to, and it's too slow. What I do works on H4 and H1. H4 and H1. Daily timeframes. If I had enough money, I would trade daily. Always. Because if you go and look at a daily chart, look at an RSI extension on a daily chart. I mean, you'd have to pick the right daily level. But, you know, if you chose 80-20, I'm just saying there's only really one on here, isn't there? Go out a bit further. Yeah. You couldn't use 80-20 because there is only one. There's only one trade in the last 4 years. It's got 100% strike rate. But the money you need to do that is, you know, you need a lot more capital because your moves, that trade there took, I mean, it doesn't sound like much at the moment, but that trade there took 2 weeks. At the moment, a lot of stuff's taking 2 weeks, isn't it? But, you know, if you went with a 70-30, for example, you'd have sold that, 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 but probably didn't work until you got there. That is over a month and a half. I can't wait a month and a half to make 0.5 to 1.5% on my account. I can't pay the bills with 1.5% over 2 months. That's the trouble with daily time frame. But if you had a 500,000 million and you were risking 1% instead of 0.5%, and you wouldn't probably do it over ADR, you'd use AWR, you'd use a weekly range for your scale-ins on daily charts, probably not daily ranges, average daily range. You'd use an average weekly range because you're trading a daily, your upper time frame would be weekly. Actually, no, it wouldn't be, would it? That would be your upper time frame. But, you know, you'd have to do everything with bigger capital to make enough money, which is, again, what the bank, you know, the banks and institutions don't have time constraints. They have monthly and quarterly reporting periods. So if something takes 3 to 4 weeks to play out, not a problem. We don't have that luxury, do we? Might have done. You're in now. Sure. See, I'm in long right now. This is a short on the daily. But this is the beauty of intraday timeframes. Price moves up and down intraday. You've got all these extra opportunities intraday on 4-hour charts that you do not have on daily charts. If a candlestick on a daily time frame does that, it's moved up 200% of ADR and down 175% of ADR. For us, we can make money out of that. Bank will just go short. You can do that as well. But just dropping that one time frame, which gives you 6 candlesticks intraday, it opens up way more possibilities for entries. And then moving down so that you've got 24 candlesticks in a day, depending on your broker, gives you even more opportunities, but exposes you to much more risk, which means you have to reduce that risk taken on a trade dramatically from a daily time frame. But again, there's no right or wrong. If you're more comfortable here, stay there. But you will have to adjust, and you can test all of this. This is the beauty of EAs and automation and the position trader EA specifically. You can test all of this. If you want to test the daily time frame, you can do it. Just change this to a daily and then do a system parameter permutation test on the daily, on the 70-30 initially, and see, right, what should I be using? A 7, a 14, a 21, 28, 2, 5, or 4? What should I be using? What gives me the results? So if that gives you 650 trades in a decade, and the generated results are X, and you're happy with it, fine. If you're like, that's way too many entries, let's try a 7, and all of a sudden it drops down to 450 entries, but the strike rate jumps by 20%. If that makes you more comfortable, that's yours. If you are worried about drawdown and the 14 increases your strike rate but reduces your drawdown by 10%, and that is your focus, that's the one to use. Yeah. All that system parameter permutation testing does is it shows you the impact on the strategy. It will either make it more profitable, make it less profitable, make it trade more, make it trade less, make your drawdown higher, make your drawdown lower, increase your strike rate, reduce your strike rate. That's all it's going to tell you. None of that in the past is going to happen in the future. But if you're drawdown focused, you pick the one that gives you the results that produced what you wanted. If you're profit focused, you pick the one that produced the profit. But you must be aware that this will be affected. Every time one is affected, another is affected. All that does, backtesting, is it shows you roughly what would have happened if exact execution had happened, but it gives you an idea of what might happen in the future. Yeah, but this is the beauty of backtesting. It shows you this. So if you fancy trying daily timeframes out, do it. Yeah. With your reversals, your entries, yeah, you've got the ability to change the entry. Yeah. So this is a tight entry, a 9 MA, EMA specifically, because an EMA hugs price closer than an SMA. A 9 EMA is a super aggressive entry. Wait for it to get really extended and then use maybe a slower entry mechanism. Try that. What impact does that have? The slower the entry mechanism, the later your entry will be, the more confirmation you will have of the entry, like a market reversal alert. Is probably equivalent to a 9 SMA entry. I use a 9 EMA because I want to get in quicker. I want my trades tighter at the moment because the market's not moving much. But I've tested all of these. I've tested lots of stuff in here. I've tested thousands and thousands and thousands of permutations. They all work, but it's a personal preference. I decided to default it to that because that's what I'm going to use. It's not right. It's not wrong. It's just me. But it's not right. It's just me. It's different. Everything is, that's why I keep saying, you'll hear me say it all the time. It's not right. It's not wrong. It's just different. Because there is no right and wrong, because I don't know what's going to happen. Neither do you. Morning, XRUpdate.news. Made me smile. I've been tracking a guy who makes a living trading head and shoulders in Forex and indices. You can make a living out of everything. Yeah, everything works, doesn't it? That's the thing. I don't get it. As you say, most are nothing like the textbook, but demonstrates everything can work by someone. Yeah. There's nothing wrong with a head and shoulders pattern. But when you test anything, right, there's two ways of testing strategies: automation and manual. Yeah. When you manually backtest something, you go out on a chart and you look for what you want. So that's not really one, but if I'd have taken that, that would have worked. Yeah. Okay. That one worked. Totally discretionary. Give this chart to someone else and they'll go, can't see a head and shoulders on there. Two different people trading the same strategy, completely different results. Automation. Yeah. If you test this through automation, you have to program and define exactly what a head and shoulders pattern is. Yeah. How you define a head and shoulders pattern and I define a head and shoulders pattern and program it in there is going to be different. So therefore, my EA that trades head and shoulders and your EA that trades head and shoulders are going to get different results. Yeah. Somebody that's trading something on a chart may be thinking they're trading head and shoulders pattern, but what they're actually doing is just really good risk management. Yeah. And the ones that work, they probably let them run because they've got that 5% of people's psychology that we haven't got. And that's a trader. Yeah. You're either really, really good at risk management and detachment from your trades, seeing something as a business, or you're emotionally a wreck. When you're in something, you press that button, you get scared to death. Yeah. 95% of people are over there. So therefore, you can't trade in the way that that little 5% can. But you will try and find it because he does it. If he does it, it must be possible. It is possible, but not for you. It's possible for him. It's possible for me to do this. People contact me in Telegram all the time. I'm in 1.7% of drawdown. What shall I do? Sit there. You're in a trade. What's the problem? I'm in 1.7% of drawdown. Yeah, it's totally normal. I live in there. I live in there. He's not living in there because he's scared at 1.7%. Right, well, reduce your risk next time if that scares you, because you're going to get more scared than that. You just started. Yeah. This is a personal thing, which is why when you buy a system or a strategy or a course, it's never going to work, because the person that wrote that system or strategy or course wrote it for them. You're not them. If you find someone that is you, you'll probably click. Yeah. Sorry, that was swearing in Italian, isn't it? Is anybody Italian in here? Is that Italian? I'm not going to do it again. Yeah. But yeah, people can make money out of everything. You can make money flipping a coin. Yeah, there's a university in Oxford, I think it was Oxford, that have proven it. They have flipped a coin. They've built an algorithm to flip a coin and take trades, and it did not lose money. It didn't win money. Why? Because it's 50-50. But it didn't lose money by flipping a coin. If it came up heads, it bought. If it came up tails, it sold it. The only thing it did was risk management. It used a slightly bigger target than its loss. And by getting a 50% strike rate, it made a slight bit more money than it lost. But every time it made money, the movement beyond its target was random. So the amount of money it could have made was obviously a lot larger, but only over that historical period. You can't predict the future where it's going to go to. So where do you put your targets? Discretionary. Everybody with a coin flip strategy is going to get a different result. Same as the guy with the head and shoulders. He's going to get a different result. Yeah. There's a guy called, I can't remember his name, but he's called the Baguette Trader. And he's got a really good strategy, which he makes work pretty well. It's very technical based, but it's all risk management. And it works very well for him. There's a lot of people trying to follow his strategy that just aren't getting it. And I've spent a bit of time in his group, not at the moment, but over last year, and been dipping in and out of it. He's cracked his way of trading, but you can't copy what he does, because he will look at something and he'll take a trade which is very close to what he thinks it should have been. And he might use 3/4 of the risk, but that's not in the handbook, so no one else takes it. It's discretionary. This is all discretionary. You can't build an EA to be discretionary either, which means you can't backtest it, which means you've just got to do it. And that takes time. People want a Lamborghini tomorrow. You're not going to get it. My set file for the market reversal alert CEA was selling on lower 2030 RSI. Selling on it? No, it doesn't sell, it only buys. Charts are on H1, doesn't seem to be getting in. The only thing I can think of is you've got a magic number conflict there somewhere, but the EA does not, it can't sell on a hitting a 20 or 30 downside because it hasn't got that functionality. I've never heard of that before. There's nothing in the code that would make it do it, so it's got to be a conflict somewhere with something. I don't know what though. I'll have a look if you posted something in Discord, but I can't. I can't think of a reason. It only goes long. There's two like lines of code, if you like, on the EA, and this side is the buys, this side is the sells. This side can't do anything when it gets below, but do that. But if there's another version of the EA running with the same magic number, that might be trying to short, and it will take a short. And it's just coincidental that it's down there. It's probably a coincidence and a conflict somewhere, but I don't know. Can't answer that one. Don't know. Right, I'm going to leave it there because I've waffled on for 2 hours. How did I do that? DAX is still pushing. I am short now. So second entry short, see if it expires. So this is your resistance. So we've tapped resistance. We've got some selling price action coming in. So we just need to see if they can continue that, basically. But hedge today. So I'll be back, not next week, week after. I'll post up on the website what's going on, and I'll post that out in the groups. But yeah, so I'm off all of next week, back on the following Monday. The following Monday is the 20. No, it's not. Following Monday is the 3rd of June. Is that right? Yeah, 3rd of June. So we've got the PMIs. So what I will probably do is an 8 o'clock session rather than an afternoon session that day, because we just need to blitz, have a look at everything. Yeah, and see what happens. But I will be around all next week. I'm not going anywhere, so I'll be monitoring all my trades. The EA will just be doing its thing, and I'll be around in Discord and Telegram. So if you need anything, I will be around. But yeah, next week should be a fairly quiet one, unless something dramatic happens, because we've got very little news. So quiet one. Going to go back and catch up for the next few hours. Okay. Enjoy the break. I will do. Well, it's not. I'm not going anywhere. I'm just having a week off. You need to reset. This is a mind-numbingly boring job. So you have to reset every now and again and just get away from the charts, because you tend to live in them. Most people in here will probably know when you go to sleep at night, there's systems and strategies running around in your head. There's charts running around in your head. Everything's running around in your head constantly. You've got to be able to just stop and take a week off. I will have to look at my P&Ls, but get away from it. But obviously do watch this thing, because this is important. So I'll be setting up alerts for Financial Juice, but I've got those in Discord anyway. So, all right, have a good week. Anything you need, let me know in Telegram or Discord, and I'll be back week after next, and hopefully it's a profitable one. I shall see you next time.